All right, perfect. Yes. All right. Good morning, good afternoon, good evening, everyone. I was talking to a muted mic. Doesn't really work, does it? So let's get it started. Yes, recording is already running. All right, perfect. So just wanted to start it a little 1 minute earlier. Can't complain, right? No, but let's get it started for real now. So I wanted to start it a little bit earlier, of course, ahead of equities open. That is what I'm going to mainly be looking at, as well, of course, also over the watch list, etc. Now, I have a few thoughts that I want to share right here on the dollar itself. And the things I want to share is that I am expecting higher prices here off of this high that is overlapping with the fair value gap. Now, in the dollar itself, I personally don't go into the 1 hour time frame or the 15-minute time frame, etc. That is way too confusing for me. If I do that, then I want to line up everything perfectly with euro US dollar. That is way too much for me. So that high that is sitting right there, overlapping with the fair value gap, that is very nice to currently expand higher off of. Now, keeping in mind as well that we have a daily fair value gap potentially in the making. So in about 9 hours right there, we will have a daily fair value gap sitting right there. That is, of course, important to understand that if we, of course, want to consolidate right now, we will likely consolidate until we create that daily fair value gap to then continue higher. Now, knowing this as well, and a few other things in mind, then if we look at thank God it's Friday potentially, what will happen on a thank God it's Friday setup? We usually hover below previous day high. That is, of course, Thursday. Friday sweeps it to then continue lower. That is when we can potentially look to gravitate towards that daily fair value gap that is sitting right there. So in this case, I would already expect this Thursday perfectly fine to potentially continue higher. But if it doesn't want to continue higher, then again, we have that daily fair value gap sitting below price action right there. And it could be, we could see it coming in that way. So here, if you already got involved, if you already had your chance to potentially take profit, etc., or make some profits throughout the week, then this is an area where I would say don't look to get involved. Don't necessarily look to get involved. Maybe low risk, so risk maybe 0.5%, 0 to 25%, etc. to get involved. But in this area, it's not necessarily very important to get involved again to catch that move. No, because we might just be waiting for the daily value gap to be created, and then we continue higher. And the way we can see that is by the 4 hour, the lack of displacement higher. If there's a lack of displacement higher, then we can tell that it wants to trade into the daily fair value gap, and it will likely wait for the daily fair value gap being created. But that is very important to get it started off with, because then that sets the direction and sets the narrative for the indices as well. So if we do look at the indices and we go over ES first, then the thing I like to see, or I would like to see, is a continuation lower, of course, and ideally not a big retracement. That low that is sitting right there would be ideally the max for me right there to continue lower. If we already see signs on the 1 hour, etc., on the 15 minutes potentially to continue lower, so we start disrespecting that fair value gap that is being created, then I would say, all right, we can already look for a boundary on the 15 minutes to potentially continue lower. Right here, I would prefer NASDAQ. And again, the reason why that is because NASDAQ still has that clear draw on liquidity. Disrespecting this fair value gap right there indicates to me that we will likely trade into an overlapping part. So the overlapping part, in this case, just the low right there, it can sting into that 4 hour fair value gap that is a little bit higher right there to then continue lower as well. Does that mean I want to trade towards it? Again, that is that high probability, low probability story that we talk about quite a lot. Where if we rank the high probability, what is the highest probability? Well, we are still bearish. The draw on liquidity is right there. So the highest probability option is still waiting for it to come into there, waiting for our ST, waiting for our RE, our usual process. That lower probability option is now trading towards those levels that are on the 4 hour right there. So actually buying, looking to buy. That is considered lower probability right there. I would prefer to wait for a sting into these and then continue lower off of there. Now, again, that might take a while today, and we might not even get it at all today, but that would be my preference right there. Then for the YM is a little bit different, as in we are not seeing any weakness, or not really seeing any weakness. We are just sweeping those lows right there, continuing higher as well. And right here, on YM, I'm not too certain on what it wants to do right now. As in, we can continue lower of where we currently are, but it's looking pretty strong, YM right here. So in this case, I would almost prefer bullish price action. But of course, with looking at NASDAQ, looking at ES as well, then that is not necessarily something I would want to look at buys from, because if ES and NASDAQ are going to drop, then of course YM will just follow along with them. So that is currently what I would be waiting on. And other than that, it's just mainly waiting for me. I'll also go over the forecast list that I had right here, where we start off with GU. Now, GU, I mentioned yesterday in the forecast video that ideally you want to have a premium array before we take that low. So we come into a fair value gap or anything before we take this low right there. And the reason for that is because this, once that low gets taken, you can just expect some kind of bigger retracement. The bigger retracement usually happens into a daily fair value gap or anything that is above that 4-hour time frame right there. So the daily fair value gap could be created, and then we can continue lower. Now that might even happen next week, because of course Friday is not necessarily known as a trending day. So even here we have already been trending for majority of the week. So Friday might just be a consolidation right there, might just be a thank God Friday setup. So if you already made profit again right here, then I would just step away. There's nothing for you to look at anymore. Nothing high probability anymore. So in this case, I would personally wait for the daily fair value gap and then see if we want to trade into it and trade off of it. That is very important. On the 4-hour, I'm not necessarily interested here anymore. If I was interested, then I would like to see that 4-hour fair value gap, that is the first fair value gap overlapping with the lows, seeing get respected, the same as we're seeing on, for example, the dollar right there. I would like to see this getting respected right there, or just wait for the daily fair value gap. And of course, the daily fair value gap is a little bit higher probability. Then if we go over the list and we have EU, same exact place where just swept those lows. Now, the important part is when we have those lows set out and we have those targets set out and you see a sweep like this, then coming into that premium array in a very aggressive manner like that, that is not necessarily where I want to look to trade. That is not high probability in my opinion. Now, the different scenario would be, let's say we had price action like this and we came into the 4-hour fair value gap first to then target the lows. That is, of course, way higher probability than first sweeping the target and then coming into the premium array that is sitting right there. That is not necessarily something I would want to see, and that I do classify as lower probability. And this is something you'll see a lot on a lot of pairs today. I'll show you that happened quite a lot of times. So this is again something where I would just want to wait. The daily fair value gap could be very nice as well, potentially even next week. But currently I just want to take a step back. The high probability conditions are over, and that is important to understand, right? We're constantly classifying those high probability conditions, low probability conditions, knowing when to get involved, knowing when to take that extra step into the market, and then knowing when to push the brakes and take a step back. That is very important. So Australian dollar CHF is the same scenario where I mentioned just a premium array. That is perfectly fine to take a trade lower from. But under one condition, and again, that is where the live trading more so comes in, because when we have an aggressive push like this into a premium array, that is not necessarily what I want to see. Now, again, there's a difference because an ST, of course, and the reason why we use an ST is, the whole premise is displacement in, displacement out, because we want to see that manipulation into the market and then out. So that is what we want to see, but a full aggressive move is not necessarily manipulation. Manipulation is when you have a consolidation like this, and then you have an aggressive move, just hovering below any premium array, aggressive move in, aggressive move out. That is manipulation. Manipulation is not necessarily one aggressive move higher. That is not manipulation. So this as well, I would classify this high right there as a fake top, and we can see the formation as well. is just one-sided candles, so all bullish candles. A retracement, the retracement doesn't really have that intention. It's not really showing those signs of it wants to reverse very strongly. Not a clear ST. This is a typical fake top where I do think that high right there is the next target. Now again, does it mean I will target the high? No. I will just wait and scout for high probability pairs. That is what I want to wait for right there. So it's the same for New Zealand dollar, US dollar, where right here we had on the 4 hour, I already mentioned yesterday that at a certain moment in time, there's also in your brain or in your mind, you should have some suspicious feeling. As in, when you have monthly contacts taken right there, we have monthly contacts delivered very nice. Then we have daily contacts, which delivered very nice right there to continue lower. And we have this daily contacts low taken. Then all this price action right there. At a certain moment in time, it will stop, of course, as high probability conditions. Now, does that mean that you shouldn't take a trade at all right there? No, but you should be suspicious. And that is why I mentioned in the forecast, after we have that context taken, and I pushed my luck a lot right there. So I pushed a lot. Full margin trade. No. Not full margin, but you understand what I'm saying, right? So on the 4 hour right there, once we do have this 4 hour value gap right there, I mentioned in the forecast as well, on a Thursday, we already expanded quite a lot. It's not necessarily, if you already took profits throughout the week, this is not necessarily where you want to push your luck. Definitely not. So once we do come into it, and we are being very picky, because as you know, I'm very picky, I'm extremely picky. So if we look at the 5 minute right there, and we do look at the 5 minute, then we have, first off, we had that, which failed to create an ST. Then we have this ST, which you could say, all right, quite a nice ST. Then we have not really a retracement into the premium array. Then we don't really create a not really a great entry. These are all signs where I think, wow, if I'm being very picky, especially in these conditions where I already made profit, it's a Thursday, do I want to get involved in this? No. And if I want to risk something, then I'll risk a very low amount just because I already made the profits of the week. Again, when you make profits earlier in the week, then the whole premise for the rest of the week, the whole objective is protecting that profit. That is it. Until you get high probability conditions again, and then you can go again, and it's a full cycle again. That is very important. So that is where also right here we start sweeping those highs, and we just aggressively move higher here as well. Which right now I would also take a step back, and even what we mentioned, because that is also the premise where we have that weekly fair value gap that is being created right there. So that is of course a big magnet. So that is a huge magnet where price might want to trade towards and off of. So that is something we need to take into account when we are trading this right there. So that is also why I mentioned once we take that low, don't necessarily want to look to get involved again. Then on Canadian dollar CHF, this don't really need to touch on it. I feel like just one big consolidation, right? This is not something you would want to trade. Unless you're a seek and destroy trader, then it could be nice. But personally, this is not something I would look to want to trade. Then on gold, this is also very interesting, and it's a very interesting topic actually, because I feel like I haven't touched on it quite enough in depth inside the mentorship, and could be a great opportunity as well next enrollment to touch on it, where we are stuck between two PD rays. Between one, if it starts on the daily, so you have a daily PD ray, and then you have a 4 hour, it's usually you either have a weekly and a daily, monthly and a weekly, daily and a 4 hour, can also be 4 hour and a 1 hour. It's constantly, you have that higher time frame PD ray, and then one time frame below it, there's another PD ray that is sort of in the way. It's sort of stuck between those PD rays. So once we sweep this high right there, which already starts on the weekly, because that is just a nice weekly swing high right there, then we have this daily fair value gap higher. In between that, we have now premium, and we have discount sitting right there. In between a premium and a discount, we have equilibrium. That is balance in the market, very easily said. What happens at balance? What happens at equilibrium? Consolidation, seek and destroy. That is the definition of being stuck between two PD rays. That is just equilibrium on price. So that is not necessarily something you would want to trade. And what I mean by that is if we have that daily right there, which That swing high is getting swept. Just looking at those wicks, aggressive move lower. Monday's not expanding higher. All right, not that crazy. We didn't have news. Tuesday is not expanding higher right there. Huge wick below the fair value gap. Not necessarily interested in getting in longs. On the 4 hour, what are we seeing? We saw a displacement lower right there. We are now stuck between this daily discount rate and this 4 hour premium. This was also stuck between this weekly swing high and that daily discount fair value gap right there. This is not something you would want to get involved in. This is very 50-50 price action. And again, do I know it once I see this price action that we will have seek and destroy, that we will consolidate? No, but as soon as this happens, that move higher right there, and we are in the expansion phase of a fair value gap. Because again, if we read the fair value gaps, then that expansion phase alone already tells us a lot. Where this, just based on that candle right there, this is not something I would want to look for shorts. And then afterwards, we say, all right, this is likely consolidating in seek and destroy. This is 50-50 price action. And that is what you'll hear me mention as well quite a few times. So that is not something you would want to get involved in. Then if we look at GBP Canadian dollar right here, I like the idea actually. I did quite like the idea right here off of the 4 hour value gap continuing lower. Did not create a new 4 hour value gap lower. And then currently just expanding off of, well, first we already came into that daily value gap. Then we swept the previous day low again, currently expanding higher. Here I just want to take a step back and you'll see me go over that next week as well, where I just need to wait for more price action, not too certain on what it wants to do right there, which is perfectly fine. So GBP Australian dollar, same exact scenario where we have a big retracement higher. We do have this daily fair value gap, but with that big retracement and aggressive move higher is not necessarily something I would want to get involved in unless, and that is of course what you'll hear me say a lot of times, when in doubt, you just wait for a new 4 hour value gap lower or higher. So this 4 hour value gap lower right there is actually the confirmation for me. All right, we might want to trade lower off of that daily value gap still. So that could be something to get involved in. Now today, I would argue wait another day and potentially wait even for next week because we're approaching the end of the week. We're approaching the end of Thursday right here, which is not very volatile. So that is my thought process on that. Then if we look at the longs, Euro GBP, where we also see, and this already starts very early, right? And we have this 4 hour value gap, which yesterday was quite a nice move. After that, we don't create a new 4 hour value gap higher. That's a little bit suspicious. That is a bit worrying, where we're like, all right, why does it not want to create a new 4 hour value gap higher then? And then afterwards, you're seeing just the lack of intention higher, and then we see just a bearish downfall right there. So if you got involved pretty early on in the week, maybe Tuesday, maybe Wednesday, then right there would have been perfect. But again, Thursday, where the trend can end, this is not very nice. And this is again where you want to take a step back, because once price doesn't follow through right there, then the context is likely also gone. Then it's just not too clear what it wants to do. If anything, we can use that disrespect as a sign and a new boundary to target that discount rate. So then you will use 4 hour value gaps lower or 1 hour value gaps to target that. Then it would more so create a flow trading plan. That makes sense. Then on Euro New Zealand dollar, we also saw this high getting swept. Then after I mentioned, all right, if we want to continue higher, 4 hour value gaps right here, overlapping with the high, same as we're seeing on the dollar right now. That is picture perfect where I would look for higher prices right there. Then, of course, once you have this aggressive move again, then this fair value gap is not something I am interested in. That is not where I go looking for my 5-minute entry pattern, etc. Either it's that first fair value gap or it's nothing. So I demand high probability conditions right there, or I don't want anything at all. And that is, of course, the whole premise where we sweep that high, we have an aggressive move lower. This is, again, not something you would want to be interested in. And if anything, it's the same as Euro GBP, where you want to switch that bias potentially, where that disrespects now becomes your boundary to look for your PD rate to capitalize on that ID right there. Then Euro Canadian dollar, nothing really. And the reason, again, is because we didn't have a clear discount rate. So just not really sure on where it wants to expand higher from. Don't want to use the 4 hour alone. Want to have daily context by my side as well, ideally. Canadian dollar JPY, this also is what we mentioned, where we have the daily VWAP gap, which is just not strong enough by the looks of it. So currently we're just dropping lower. Very wiki price action, don't like it. So let's see if in the meantime we actually got something on the indices and we are seeing something. I'm going to mainly look at Nasdaq myself right here. Let's see what we want to do. So currently, if we want to already, and this is nice because again, if we read the fair value gaps here, we had a very small fair value gap. Is that a very small fair value gap? Yes, perfect. There's a very small fair value gap right there. Now, this fair value gap should create a new fair value gap higher, because that is just basic order flow, right? So if this becomes a very small fair value gap, which I personally don't like very small fair value gaps, once you have this aggressive move lower, there's already a sign when you're overall bearish, you still have the drawn liquidity, which is sitting right there. That could just be the sign right there that we want to continue lower. So that is looking quite nice actually currently. Let's see on the 15-minute what we are doing. If we can, let's see what we want to do. And here it's about reading that price action, just seeing what we want to do. In 10 minutes, we create that 1 hour fair value gap right there. Which, let's see how we react right there. Of course, I need to have some kind of 50-minute premium rate to work with. So ideally, fair value gap lower to work with, which could be nice. And until then, it's about waiting. And until then, I also don't go into the 1 minute time frame or anything. See on the 4 hour, what's the dollar actually doing? Showing some signs of rejection right there. All right, quite interesting. Let's see. Yes, has a bigger fair value gap potentially in the making, where it's not expanding higher off of this fair value gap right there, because we see this up candle right there. This up candle doesn't necessarily need to be at the expansion phase, but the next candle you would expect that expansion phase for that new fair value gap. It just doesn't happen. It's very interesting. So if this happens, that is again the same premise what we saw on the dollar, where you were using the 4 hour and the daily to filter out that 4 hour fair value gap right there, where if this 4 hour candle closes, then the next candle should just be up candles right there to create that expansion phase of the new fair value gap. If that doesn't happen, like we're seeing on ES right there on the 15 minute, this is just fractal, then that means that either we are now preparing price to trade into this 1 hour fair value gap right there, or of course, what are we doing with overall bearish premise? We might just continue lower immediately right there. Yes, perfect. Any premium array that acts as a boundary right now, so any 15-minute fair value gap right now lower, that is something I would want to get involved in. To firstly target that low, and second, of course, that low right there, which is the ultimate context low, and then eventually right there. But again, it's important to understand, ideally you want to get involved before we take those lows, because then it's a very easy run, as in it happens very quick. It's a very easy run towards those lows right there and towards the drawn liquidity. After we take those lows, we might just mess around right here for a long time, and then we deliver towards the drawn liquidity. That is why I want to ideally get involved before we take the lows. Let's see, 7 minutes. In the meantime, what I would do if I wasn't live streaming or anything, or I wasn't live, then what I would do in a scenario like this is just set my alerts. So again, 7 minutes plus 15, what is that? 22. 22 minutes, set my timer. All right, in 22 minutes, there might be a new fair value gap, bearish fair value gap on the 15-minute time frame. If that is being created, it will be in 22 minutes. So in those 22 minutes, I go do something else. Don't focus on the charts or anything, because then I just save those brain points that I'm going to need when the actual entry does happen, because then I need to focus on that psychology and being aware of what am I doing, etc., etc. But currently, this is looking quite nice as well. So we'll see what it wants to do. Where on YM again, just the only instance that I would be interested, the only instrument currently that I would be interested in is just Nasdaq right there. It's the only one. It's really the only one. Clear drawn liquidity, can still deliver lower. It's the only one. Even ES can do it, but I would prefer Nasdaq for sure. Let's see. Let's actually take a look. I haven't looked at crude oil today. All right. Deliver towards the target. Quite nice. Quite nice. All right. Another sweep on Australian dollar, US dollar. Typical. All right. Then right now for me, it's also waiting. Now I do want to keep on showing you if anything happens right here. So I'll keep on, I'll keep the live right here in the Discord as well. In the meantime, I am going to do some other things, and I'll set my timer, which will be in 20 minutes. If we create a Verwijgen blower, then you'll hear me talk again, which I would also advise you to do. You can do that. Now 19 minutes. Let's see if we create a Verwijgen. In the meantime, I'm going to do something else, and I'll check everyone later. So I'll just mute myself right here, and I'll go do something else really quick. Perfect. Thank you. All right. Yes. All right. So my timer went off. I'm back. Here we are. Waiting. Because now the next step is, and ideally this is also something you can do, is you set another timer for 15 minutes or 10:30 right there, and you set an alert right there. So that is how I would manage my alerts, etc., and manage my chart consumption, you could call it, right here. And that is something I would do personally. So let's see if we do want to sting into that fair gap right there. That is the one I would be interested in. If we leave behind a new fair value gap, then that is the new one I would be interested in, which doesn't seem like we will. So that is nice, because that is of course a nice sign that we want to potentially sting into this fair value gap to continue lower. That is quite nice. Let's see what we want to do here. ES also has this fair value gap to work with. ES is now currently in a also quite nice spot. The 1 hour does have that fair value gap, which Nasdaq doesn't have. So again, if we look at the arguments right there, then looking at ES just has a bullish fair value gap on the 1 hour. Nasdaq doesn't have that. Nasdaq has the drawn liquidity, etc. So I would prefer that. Let me set an alert right there. I also, just before we do move into it, I also of course do not want to have a very aggressive move into it. Just a sting right there, that is enough. That is enough to then go look at the 1 minute for potential 1 minute ST. Would you enter on the ST considering the time 10 a.m. and also there's a clear target, or just 1 to 2 R? I personally would not enter on this ST. I would always want the 1 minute to get my extra confirmation. I could see why this could be a nice entry off of the ST. The only thing is that it's not really coming off of any other higher time for fair value gap. You could argue the gap right there. You could argue the fair value gap itself right there. I personally would not want to enter off the 15-minute ST and would wait for a 1 minute ST. Just anything on the 1 minute just to give me that direction. That is what I would prefer. And the 1 to 2 RR is also, 1 to 1. Mwah. Would there be any value in waiting for a 5-minute ST? 100%. For sure. So if we come into that 15-minute fair value gap and we wait for a 5-minute ST, that is of course what I would classify as a higher probability. Because that is basically, usually what you'll see is that is just a 1 minute ST plus re. Now the thing we usually see with 1 minute STs as well, and this is something I want to touch on in a flow trading plan more, where if you wait for a 1 minute ST from a 15-minute fair value gap or PD ray, then in general, it does get swept sometimes, but it doesn't sweep all the way above it like crazy like this. No, it just is a little sweep right there to continue lower. So what I like to do, if it is a 1 minute ST, just cover it a little bit more to then target the easy 1 to 2. But 5-minute ST for sure, that is very nice. We come into that 5-minute ST, that is nice. All right, let's see what we want to do. Let me check. Let me check here. Do you consider the current 4-hour chart an ST? Let me see. Or is it too messy with consolidation, MNQ, or Nasdaq right there? The 4-hour ST. Yes, the only thing is of course that we have the context missing, as in we have potentially an ST in the making, and the reason why I would personally call this an ST, even though we don't have clearly that bullish for value gap higher, is because this above the gap. Okay, above the gap. It's very messy, but I would call it an ST. Yes, for sure. And the whole reason, and it's actually the same example as this one right there, is because we have these wicks, the long wicks. If we don't have a fair value gap, so if we lack a bullish fair value gap, or we lack potentially, I always want to have a bearish fair value gap, but we lack it in the first instance, then that wick right there is just an indication that we did have displacement. It's a very nice long wick right there. That would be an ST for me, for certain. For sure, let's see if we do want to trade into it. No worries. Let me check really quick. Yes, is right there. All right. Nasdaq. Sorry for no worries. If you already mentioned it, but are there any other pairs of interest right now for you other than Nasdaq? Personally, no. And if there was anything, then it would be ES, but Nasdaq would be the highest probability in my eyes. And to explain the reason as well, is because the drawn liquidity right here is still clear. Of course, volatility-wise, kill zones. Yes, this is the one I want to be trading because we're approaching indices, which is just very volatile in later on in the day, where currently you'll see forex pairs, etc. The volatility starts to die down. So that's the first reason. Second reason is just it has the nicest price action currently with the drawn liquidity, the sweep right there, disrespecting, no 1 hour for value up higher. That is what I would want to see. So yeah, currently only Nasdaq. Potentially ES, but more. If Nasdaq, and at a certain moment in time, it's also. Let me do this real quick. Let me see. Perfect. All right. So at a certain moment in time, then okay, cool. If we mitigate short-term low, would that change anything? If we come back below this low right there, and beneath that low, it's more. I would want the fair value gap, but right here, what I wanted to say is as well that currently, when we are this close to that low, a retracement right now into that fair value gap, that changes the whole situation. As in, when we were just there within the next candle, etc., and we were about maximum right there to then continue into the fair value gap, to then continue lower, that is a whole different story. Where this candle right now does not seem like it wants to trade into the fair value gap. All right, perfect. But it's very close to the drawn liquidity. Would I now expect, or would I now like a retracement all the way back to then come to the drawn liquidity? No. So when we are close to that drawn liquidity, then it's again that story of, if we now retrace, I would not really prefer that. As in, if now I would like for price to take the drawn liquidity first, and then afterwards I would like to zoom out again, seeing, are we creating a 1 hour fair value gap lower? Are we creating a 15-minute fair value gap lower overlapping with the lows? Then that might be something very interesting. But right here, I would need a little bit more confirmation off of that 15-minute fair value gap right there lower to get involved. Just being very picky with my price action. ES right there. Something we could potentially look at the 1 minute in a few moments. Let me set an alert. I'm already warning you, by the way. My alert is very loud, so excuse me if you can hear it and it damages your ears. There it is. Alright, there it is. Let me check. 15 minutes. Let's see. Again, this trade, again, is not something I personally would want to take because I was waiting for NASDAQ right there. But let's see if we do get a setup. Oof. Alright. NASDAQ almost approaching the same fair value gap. Let's see if we can get something. Nice rejection currently. We can follow through with a fair value gap lower right now. Would be nice. Is Nasdaq any? Okay. Now it will be interesting to see what we want to do, because if we read the fair value gaps, then we have that bullish fair value gap, of course, which is just the bullish side of that ST, of that potential sharp turn that is in the making. Ideally, of course, you don't want to see this bullish fair value gap follow through. So ideally, this candle or the next candle you want to have creating a bearish expansion phase of that fair value gap lower. This next candle, this candle that we are currently in, should expand higher if we want to continue higher off of that fair value gap right there. Because this already respected it. This should just continue higher, creating a new expansion phase potentially of that new 1 minute fair value gap higher. Of course, that is a little bit of a utopia, as in you might just mess around quite a bit right here before you get any move. But that is ideally what you would want to see. So thinking both sides. And of course, if we're thinking both sides, then I want to see disrespect of the bullish side. So then continue the bearish side. Just bearish fair value gaps lower right there. Perfect. Let me see what is time frames above us. What are they indicating for my potential stop loss right there? Is Nasdaq going any close? Not really. Let's say the 1 to 2 is that. I want it to be at those lows right there. Ideally, some kind of retracement still. There. One fair value gap would be enough here. The second fair value gap is just if the second fair value gap right there is lower than the above one, then that is the one I would like to trade off of. Are you taking a trade that is not in a kill zone? Really depends on the 1 minute time frame, and really depends on the setup. As in, on ES, ideally I want to look at trades from equities open until bond hour close. In between that, you'll still see volatility maybe die down a little bit, etc. But on euro, US dollar, etc., then depends on if you're trading a flow trading plan as well. Flow trading plan, then ideally you want to make use more of time, especially on the 1 minute, because you need the volatility just to follow through on price. Otherwise, you'll see maybe some price action like this throughout the whole kill zone or throughout the whole session, whatever you're trading right there. So ideally, yes. But depends also 15-minute time frame, a 5-minute time frame, especially on forex pairs, etc. Indices always I want to execute ideally after equities open. For forex, if I'm trading a 15-minute or a 5-minute, then in between that London and New York session right there. So from what is that, 5 a.m. to 7 a.m. right there, New York local time, that is still perfectly fine for me to execute. So this right there, let me actually see before. I was a little bit late, to be honest. That is a 1-to-1. Oh, not something I would like. I would prefer to trade a little bit higher to squeeze out that RR. Of course, not too high, because of course if we trade too high, then also we might just disrespect everything on the premium race side. And this is also why I prefer Nasdaq, because ES below these lows right there doesn't have that target, right? Doesn't have that clear, concise target, where Nasdaq did have that clear, very nice target. So if this would have been an entry on Nasdaq right there, for example, then the 1-to-2, if it's a little bit lower than that, that's perfectly fine, because we can still accelerate and run towards that target, where ES might just sweep those lows like we're seeing on YM and then just stop there. So that is my thought process. And in that case, also what I would do, if let's say you would put on this entry, an entry like that, then if you target these lows or you target a 1-to-2, then just keep in mind that after these lows are taken right there, I want to be break even no matter what. I want to be break even right there. So that is also very important, because then after these lows, like we just mentioned, it doesn't really have a clear target beneath that. So for it to do something like this would not be crazy. All right. And from now on, you'll see me zoom out to timeframes. That is, of course, important to note whatever fair value gaps are being created. In about 6 minutes, we might create a 5-minute fair value gap lower. Of course, ideally, that's what we would want to see, because that indicates bearish intention. When the new 15-minute fair value gap gets created, then I would hope that it has reached that break-even level right there. I was hoping for Nasdaq to come into it, at least have some kind of setup. Reminds me of that day where, which day was that? This day, right there, where the move was very nice, just couldn't get involved. Five-minute does not create that expansion phase. That's quite interesting, actually. Aggressive move higher. That is a bit worrying. Exactly my thoughts as well, Jamie. That is exactly what I would think as well. In that case, that if it does want to move aggressively higher, you might just see the same exact scenario what we had yesterday, where yesterday we saw the move lower on ES, etc. ES already came into the daily fair value gap. Nasdaq just didn't quite yet. See something like that, and then we continue lower. Might just be the same exact case. If that does happen, then Nasdaq is something I would look for a nice trade on. It's what I would argue. With price getting this close to the draw on liquidity, does it make the draw stronger? Yes, I would argue yes. I would say yes, it is indeed stronger. As in, for price now to reverse higher and take out the highs, that doesn't make any sense. Again, it can do that, of course, but the probabilities wise, does it make sense for price now to return all the way higher? It can come around here. That it can do that, but taking out these highs right there, no, that's not something I would want to see. I'm not in ES. No, I'm not in ES. I'm waiting for Nasdaq. If Nasdaq still sets something up, then that would be ideal. Then I want to get involved in Nasdaq. Let's see if with that push and Nasdaq is also going higher. Nasdaq can do something like this. It would be very nice. But that would come at a cost that ES, beware in ES, likely get taken out. There it is. Excuse me for your ears. Alright, now if we now get a number 1 minute ST right here on Nasdaq, that is a trade I would personally take. Let me get my MetaTrader ready. Alright, does the displacement in this Nasdaq leg say anything about the true intention? You could argue yes on a 1 minute basis, but for it to truly disrespect anything, I would want to see the intention being disrespect, bearish intention right here being disrespect on a 15-minute basis right there. So that is what I would look to actually invalidate the ideas. And on the 1 minute right now, I would still say, all right, if we get the ST and we get the entry right there, then that is something I would still be interested in. Keeping in mind that yes, right there, this was a loss if you were to take that trade right there. Name for Nasdaq and IC markets. Let me check for you actually, to be certain. US Tech. That is the one I use for IC markets. So that is US Tech. Yeah, US Tech. Yes, perfect. That is the one. Currently not looking like it wants to have an ST lower. Coming above the 15-minute Vega right now. This would be the last area for me. If it wants to make an ST right here, would be the last area before I invalidate the ID and before I would not be interested in it anymore. On this 1 minute candle close. This 1 minute candle close is above the 15-minute Vega gap, then Perfect. That is my ID invalidated right there. That is me not interested anymore in any ID right here on NASDAQ. Same premise, and we could actually argue right here that we had this move down, but we had just look at what this candle is doing right there. It's not something I would want to get involved in. It's a bit of a shame. That is a bit of a shame. Now, in order for me to get involved and potentially be interested again, we talk about that scenario. Then on this 15-minute candle, first off, I would want to see this 15-minute candle respecting or at least showing signs that it wants to continue lower right there. So respecting the Verwijt gap right there, potentially creating a new 15-minute Verwijt gap to get interested again. But currently is not something I would want to get involved. For crude oil in IC markets, let me check. Let me check really quick. Longs could be interesting. But the thing is that my overall ID was bearish. Now, if we disrespect everything here, so that could be the case, of course, where we disrespect everything here, and we have 15-minute Verwijt gaps higher, that could be interesting to potentially target that low. But for me, that would be off the table. But in a flow trading plan, that could be very well the case. Could very well be the case where the longs are interested right there or interesting towards that low. Let me check the symbol. No worries, no worries. It's wait. For crude oil on IC markets is this one. I had a hard time finding it, but it's this. That is the one. WTI then underscore Z3. Z3. Are there any FX pairs you still have an eye on for tomorrow? Not really, to be honest. And the main premise behind it is the profits I made earlier in the week. That's why already on Wednesday, Thursday, not really interested. Then if I was interested in something, if we didn't have news supporting the ID, or if we have news supporting the ID, then ideally a $10 setup might be nice. Or any pair that can still consolidate higher. So if I scroll through it right now, let me check. Where Euro US dollar, not really, because we already have this nice expansion lower. So for Friday to continue lower, actually, wouldn't really prefer it off those daily Verwijt gaps. But could happen. Just personally don't really want to get involved right there. Use the Canadian dollar. This is lining up very nicely for next week, actually. If we fail to take out that high this week, that could be very nice next week. Australian dollar CHF. Nope. No. And these last ones also not really. No. Then for the longs, Euro GBP, nope. Euro New Zealand dollar, no. Euro Canadian dollar, no. Canadian dollar JPY, no. Not really for tomorrow. Nothing, to be honest. Let me check. Hmm, 4 minutes. If the 4-minute candle close right there is in the place where it's currently at, so in those next 4 minutes we don't have something like this, where we at least below that 50% of the Verwijt gap, then that is going to do it for me. That is going to end it for me right there. All right. Where in this case, also if you were still looking at the 1 minute, then for me, I would not just want a 1 minute ST right now. I would want a 1 minute ST plus a re. Just based off the fact that we completely disrespected this boundary, that premium rate that we were looking at right there. With a rejection higher like that, then of course. The main reason as to why I trade Nasdaq in Forex or in a CFD and not as a future is I've always been used, as in that sounds weird. I've always been using Forex in a sense. So when I transitioned from Forex, eventually trading ES and Nasdaq, etc., I just thought it would be easier for me to stick to my MetaTrader, my terminal that I'm used to, etc., and just try to trade CFDs than for me to learn the futures. But I have been interested in learning the futures because I do think if you are truly dedicated in only trading Nasdaq, ES, etc., I do think the futures are way better for that. But that is the main reason. It's like it's not a particular reason that I do think CFDs are better because I don't think that is at all. But for me, it's easier. I took the easy route in a sense. Yeah, 100%, 100%. Very true. Very true. Trading views is a lot easier than MetaTrader. MetaTrader is very outdated, very old. But once you're used to it, it's like, yeah, I don't know. It's hard to get rid of it again once you're that used to it. So I always wanted to trade on TradingView. Then I got used to MetaTrader and it was like, I didn't want anything else anymore. This is a nice rejection though. So we won't close it just yet. Let's see what we are doing. See what we're doing in a 1 minute. See how order flow might potentially establish right here. All right. ST on the 5 minute. Yes, there is actually. There is 5 minutes right there to create a 5 minute ST. It's pretty interesting. All right, let's see. Ooh, those are my magic keys. Don't mind them. Right. Now, keeping in mind, just quickly, this will likely create a 1 minute survival gap. Then I still want to take into account that potential 5 minute survival gap that is sitting right there. The RR is worth it, of course. The bodies is fine for me. 1 to 2 is right there. Perfect. That's perfect for me. Currently, I do want to execute on the survival gap itself because that will give me some extra RR right there. Because if I enter on the creation, then it's not that great because I might have to squeeze out a little bit too much RR. In that survival gap would be my market execution. Don't use a limit, I use a market execution right there. So if you're interested, if you do trade CFDs, and I just watch the trading view chart right there, and I have my open trade, my fingers on the open trade, on my MetaTrader, my magic keys, and as soon as I see that one pop into the survival gap, that is when I execute. Come on. Come on. You can't do that. I don't want to enter on a new survival gap lower, and the reason for that is because that would kill my RR, and I want that low to ideally have my 1 to 2 RR. This would be 1 to 1. That's just not going to cut it. Yeah. All right. Once price comes below these lows right there, that invalidates the full ID for me. So if it first comes below that low before it actually retraces into this fair value gap, not the lower fair value gap. I want to trade off of that fair value gap right there, and that invalidates the ID for me. Yes, yes, I would still take the entry if this fair value gap is disrespected. Depends really much, of course, on the rejection itself. If it's like this, then yeah, of course, it's a little bit of a different story. But slow rejection right there, yes, I would still take the entry. In an ideal scenario, I would take an entry off of that first fair value gap. That, in my opinion, is higher probability than the entry I am waiting for. But since the RR right there is just not really worth it for me right there, on a Thursday, potentially, again, yes, there's still a reason to target a 1 to 2 there because we still have the target right there. But I would want to be break even beneath those lows. So if you're about to take that trade, then again, that is a different story. So that would be my action right there, which again is valid. I just really want to go break even below those lows right there. Once this first low has been reached, I'm break even. Let me put it back. Perfect. And this again is the same scenario, right? Where it's very tricky because the RR is just mwah. It's decent, but is it worth it on a day like this? You could argue no. So what will I do in a scenario like this? Decrease my risk. That is also important. I decrease my risk because I already made profit at the beginning of the week. So my risk is already lower going into today. So I don't want to blow those profits. If it's a dent in the profits, like a small dent, perfect. If it's just it eats the half of the profits I made on Tuesday, then of course that's not something I would want to have. And it's the same thing. What I wanted to say right there is that this retracement is pretty hefty before we deliver towards the lows. It's closer to the lows than it is towards that fair value gap right there. The same exact premise what we saw with this 50-minute fair value gap right there. So, like, wow. If we create a new order flow leg lower, by the way, so it doesn't have to be off a previous premium rate. If this creates a new order flow leg lower right there, so just a leg with fair value gap lower, then I also don't want to take a new trade. If it doesn't have a fair value gap in a leg, that's still fine. Watching paint dry. This fair value gap would still be an ST right there. This fair value gap, so that right there would still be an ST entry. If it creates a new order leg lower off of that, that would be the re-entry right there. Look at gold for sure, for sure. In the meantime, let me actually take a look before I completely miss the trade. Love to hear that, John. Absolutely love to hear that. Love that. And that's what I hope for, of course, that it is insightful and that my thoughts are helpful, actually. Again, if you took that trade right there, that is fine. But just know that the risk management is a little bit difficult because you have a lot of drawdown to work with right there. So once we take these lows, that low right there, that is absolutely where I want to be break even. And what is, I don't remember if I did say it, but if this creates a new order flow leg lower, my ID is invalidated and I don't want to get involved anymore. You could argue that I'm more picky than usual. Even, I don't know if that's possible, but you could argue that I'm even pickier than usual just because I already made profits on that Tuesday, and that is important to understand. But I don't want to blow those profits. That's so important for me. Should you take a trade into the 1 hour VWAP to the short side, aiming for the wicks below? On gold, I imagine, right? Let me see. The wicks below. Into the 1 hour VWAP. Let me see right there. Ideally off of the 1 hour VWAP, of course. Into it, not necessarily, but off of the 1 hour VWAP, that could be quite nice to continue lower right there. But the whole gold scenario is where I personally would not want to get involved. And again, that is very important for me to state that gold is not necessarily something I would want to get involved. The only thing I was actually looking at was Nasdaq for me to personally get involved. Even with reduced risk, would this be considered high probability? I'm new here, but I would step away from this position if I was in profit for the week. Yes, that is very true, and that is also the reason why, like, if it delivered, so the way I see it, and the way you'll also hear me mention a lot in the videos where you do go through them, etc., then you'll hear me mention a lot that if I demand something of a price and price delivers towards my demand, which of course can be very obvious, but if that exactly happens in that manner, me being a very picky person, a very picky trader, then that automatically means that I have high probability conditions on my side. So if that already happened, which by the way, right now, I would cut the trade, close my MetaTrader, I'm done for the day, no trade for me. But right here, if this did deliver towards my demands right there, then that would be high probability. Still, keeping in mind that I would be very picky because I already made profit. So that is very important. So yeah, right now, for me, step away. I'm in profit for the week. Done. Now, just to, because someone might be in this trade right there, even off of the 5-minute ST, 1-minute ST right there, or the 1-minute re right there, just to go over the risk management. It's a very easy process right here because I would want to be 100% break even. Once this low gets taken, I want to be break even. And again, of course, the chance of getting that break even, as in getting out at break even, is very high. It's probably pretty high. But that's just my thought process that I absolutely want to be break even right there. Love to hear it, by the way, Johannes. Thank you. Love it. Love to hear it. Love that. And with this entry, it is not too crazy actually that the 5-minute, if you were in on a 5-minute ST, the 1-minute re right there, if you got involved right there, I personally did not get involved right there. So if this is not too crazy because it's a very accurate entry, as in it's only a very small portion that was in drawdown right there. It didn't experience a lot of drawdown, which means that it's a pretty accurate entry. which means that allows you to go break even a little bit earlier than usual. Because if something like this happened, then it would of course be pretty difficult to actually go break even, because it can easily come back to break even and then continue lower. 15 minutes. 15-minute might create a fair value gap, but again, once we're that close to those lows, to that drawn liquidity, to that 1 to 2, I just wanted to expand lower fast. Once this low gets taken, so on Magic Keys, I have if you're using Magic Keys, then there's an option where you have auto break even. So I would put it below that low, a little bit higher potentially, just to take into account that it might mess up. And if you are trading on CFDs as well, then of course the accuracy on the broker itself is not that great usually. So yeah, that is where I would have my auto break even line. The 5-minute ST reaction was good, but obviously hindsight, yeah, true, 100%. I have both actually. I have for Magic Keys, I have the hardware and I have the software. The hardware, I would say, is not really worth it. As in, if you have the software, then that's perfectly fine. Just use the software. I do tend to use the hardware only because I have it, but I only really use the open calculator and then the open trade. And that's it. And if I need to go break even, then it's SL at entry. And that's it. More than that, not really. So the software is really more than enough. And I prefer it more because if I do go somewhere or I'm away from a chart, etc., then I just have the software on my laptop or PC or whatever. But I have both, to answer your question. And this right here, I would actually right now make the argument that I would already be break even on this trade. And the reason for that is because this, for it to continue order flow, there should be no reason to come back above the bodies right there of that 1 minute order flow. For it to continue 5-minute order flow right now, we are creating that 5-minute fair value gap, so it has no reason to come back above that candle right there into that body again. On the 15-minute, there's no 15-minute fair value gap being created, which means that if I remove this really quick, which means that here, and if we put the entry actually back, we see the entry line is at that low. So for it now to come back to that entry line on the 15-minute would mean that we failed to create a 15-minute fair value gap, which means there's no bearish intention. So actually, I would want to be break even on this trade already right now. Because there's no reason. 1 minute order flow doesn't support the ID, or there's no reason for it to come back there. 5-minute, no reason. 15-minute, no reason. With an accurate entry, that is of course the things you will see where you can go break even pretty early. And that is why the advantage of waiting for the fair value gap or waiting for the creation of the fair value gap, etc., can differ. Because if you wait for the sting into the fair value gap and you get an entry like that, then you can take entries like that and take 10 break evens. And if you have five trades, so 15 trades, 10 break evens, 5 trades that just play out, where maybe 1 stop loss, etc. Perfect, right? Perfect. So this right there, again, just to remind, that would be a break even for me. Right there. The trade would be break even. Let me see what, yes. And gold right here. All right. Interesting. Break even it is. Exactly, break even it is. That's the one. Perfect. Nice. Love to see it. 4th 322. Ooh, that's nice. Oof, that's a nice entry. That's a lovely entry. 43.22. Wow, that's a nice entry. I like that. It's very, especially in that scenario. Yes, 100% break even. 100%. 100%. If the entry was, because that is around, that is there. That, wow. Oof. Oof. That is beauty. That is a beauty. That's also why I do want to look into futures, because I do think the entries itself can be more accurate. Whereas on CFDs, it's sometimes, whoa, it's a pain in the ass sometimes. Yeah, exactly. Laser precision with futures. It's very true. Very true. It's funny, when I switched to Forex, from Forex to futures on TradingView futures, then I did notice, at first I was just trading US 100 and stuff, which is just capital.com and all that good stuff. But then I switched to actual futures. It's like the accuracy you'll see is, it's very, very strange. Very lovely. Come on, you can do it, Price. There it is. It needed my words. It needed me to say something. That right there, even if it leaves that equal lows right there, that is break even. And already, of course, what we discussed a little bit earlier, already break even. So currently, if you are break even and you are in the trade and you feel some heat beneath your feet, I would just advise to walk away, maybe even enjoy your day, do something else, because it's just a break even or take profit right there at that moment. CME is heavily regulated in US futures, so the spread is typically always 0.25 ticks or 1/4 of 1 full point, so there can be sky high precision. Love that. That's very nice. It's interesting. It's funny how the US is very heavy on regulations. Very heavy. Even though you would say, well, maybe that is why it is regulated heavily in the first place, because there's a lot of traders from the US. CFTC regulating body. The US does not mess around. So yeah, true, true, true. Let's see. Let's zoom out on some time frames. 5 minute, created a new fair value gap. Again, no reason to come back. Of course, it might come back. And if it does that, then we know that that is likely lower probability. 15 minutes as well. When you have a fair value gap like that, this is also perfectly fine reason to go break even at that moment in time. As in, I would not, for high probability conditions to be there. And again, going break even is also looking at high probability and low probability conditions. Because would it be high probability for price to do something like this and then continue lower? No. You have the fair value gap, you have the body right there of the order block, it should continue lower off of that. And this is very interesting because this is the reason I wanted to go break even right here, because here you could, one or two things, of course, Mr. Obvious, thank you, but one of two things right here. We could have a big retracement, something along the lines of this, or we could just accelerate and expand lower towards that monthly level right there. That is ideally what you would want to see, because after this, Nasdaq had quite a lot of retracements in the past few weeks as well. We had the big one, smaller one, and then even a smaller one. And you can notice that once we tend to get closer to a drawn liquidity, the retracements become smaller and smaller and smaller. And then we have that last push of volatility, which we were already seeing yesterday right there, to then continue lower towards that monthly drawn liquidity. And that is, of course, fractal. So that goes for every drawn liquidity right there, where you have big retracement, but a little bit smaller, small retracement. And that is why I like to use, after the weekly fair value gap, like to use those lows right there with the overlapping fair value gap, because that is likely and usually the highest probability PD rate to use in that case, because the last push will be very quick towards the drawn liquidity. And it's the same here, where you have fair value gap right there. Doesn't necessarily need the overlapping part. Can do it, doesn't necessarily need it, because it's already very close to the drawn liquidity. And that is, for some people, taking a 1-to-1. That would be the 1-to-1 right there. Let me actually see what the dollar in the meantime has done. Nice. So that could be quite nice Vanguard 5 setup. Did EU and GU continue lower? GU, not really. EU, yes. So EU could have a very nice Vanguard 5 setup tomorrow. That could be quite nice, actually. Where the rest is just, seems like they're done. New Zealand dollar, US dollar, GU, like they've been running a marathon this whole week and now they're just exhausted. They're done. The gold. Oof, did not come into it. All right. 30 seconds. 30 seconds until we close with the fair value gap right there. And this is a perfect scenario again. Fair value gap overlapping with the lows right there. Quite nice. Personally, would not take another trade right here. Would just not take another trade. I was already in the trade as well. Then of course not. But even in my scenario currently, I don't want to look for another entry. Because if that does happen, then I just want to see a quick move towards the drawn liquidity. Was lucky enough to catch EN and EG forecast. Was love to see it. Love to see it. Love to see it. Yeah. And that's always what I hope. The forecast is or open somebody's eyes. And then the entry pattern should be quite easy. Do we want to retrace all that way towards FFI gap? The last Australian dollar US dollar stop loss got hit and then it fell lower. Welcome to the club, my friend. Similar to ES, but only thing is I didn't take the trade right there, but very similar. And it happens quite a lot in trading, so. But yeah, it is what it is. It is what it is. It is what it is. It happens, unfortunately. It happens. The scary thing is, of course, but that is something you'll hear me rant about a lot, and is that people need to find a reason on why it exactly happens. And that is usually the dangerous part, because that leads to a shiny object syndrome cycle. But it, of course, is always not nice. It's not nice. It's very annoying. It's a very annoying thing to happen, but of course, it does happen. Tomorrow, by the way, I'm going to test out a new monitor as well, just to talk a little bit on something different. But I'm going to test out a new monitor to hopefully that will also improve the quality of the WAP videos, which will be quite nice. So it's better seeable. Then I might not need the fair value gap thing anymore. This one. Sometimes this is quite confusing, but sometimes I do feel like this is a wick. I'm like, the wick? No, it's a fair value gap. Love it, Jamie. See you at the next one. Thank you for tuning in. I'm also going to head out actually because I'm currently waiting on nothing. But again, the same scenario where, or same exact thing. I would not take a trade off that new 15-minute for Vega personally. If it wants to continue lower, of course, it can continue lower off of that. I would only expect a real small sting into it. So take that into account if you do look for a new entry pattern right there. To then continue lower. I would not want to see a big retracement right there. Not at all. Needs to do everything right now to continue lower. Needs to do it very quick. And this trade, of course, if you're in the trade, which some people are, I believe, right there, then make sure you're break even. Make sure you are break even and protecting that risk management. So that is very important. And in the meantime, I am going to head out right now. It was a great session right here. Lots of information, hopefully. And I'll see everyone on the next one. I will personally not be trading, just before forecast. I will not be trading on Friday. So I will be trading next week. Let me see the economic calendar next week. Monday, Euro and JPY. Could be nice. Then Tuesday for sure. All right. All right. Perfect. Then I'll see everyone at the next one. Perfect. Thank you.